couple of years, Islamic finance investment has recorded a dramatic growth with presence in more than 75 countries, both in Muslim and non-Muslim dominated communities. There's also a growing number of international financial centers that are beginning to offer Islamic financial products and services, in the US, for example, London, Singapore, Hong Kong, places that are traditionally not known for providing such products and services. The number of Islamic banking institutions worldwide, including conventional banks that are offering Islamic banking services, for example, have doubled to more than 300. The total Islamic financial assets under their management now exceeds $1 trillion US dollars. So Islamic finance is now amongst the fastest growing financial segments in the international financial system, with an estimated annual growth of between 15 to 20%. Now, the rapid growth of the global Islamic wealth management industry has undoubtedly generated interest both home and abroad, with private investors and financial institutions starting to show keen interest in participating and understanding a bit more. So this therefore makes these series of webinars by Trust Arthur not just very pertinent, but also timely, in order to not only create awareness, but also encourage participation, particularly in the highly volatile and constantly changing economic environment that we live in today. So I, on behalf of Green Circle Energy, they're very proud to partner and support this opportunity to enlighten the Ummah and all those who are interested in Sharia compliant, socially responsible investment opportunities available to us in Nigeria. In addition, the hope is that this series of webinars will enable individual investors, as well as corporate organizations within the ecosystem, deliberate avenues and synergize efforts to grow the industry both locally and inshallah globally. In addition to that, we're hoping that we will also be able to identify constraints to growth of non-interest financial capital markets and how those challenges can be overcome or addressed. So to help us navigate this landscape today, as well as give us a practical example of an opportunity for Sharia compliant investment, I would like to warmly welcome our two eminent speakers, Dr. Basheer Oshodi, CEO of Trust Arthur, and from Australia, Mr. Rehan Ahmed, CEO, co-founder of halalstocks.co. Let me begin by sharing a bit about our first speaker, Dr. Basheer Oshodi, who will be speaking to the general understanding of Sharia compliant equities and local as well as global opportunities. Basheer has over 23 years work experience in banking, real estate, and academia. As I mentioned, he is the chief executive of Trust Arthur, a fund management company. He's a principal of a UK Sharia compliant real estate fund. Dr. Basheer was also group head non-interest banking at Sterling Bank, who set up the non-interest banking window back in 2013. He was a member of the non-interest finance working group. He was a member of the SEC Alternative Finance Market Master Plan Committee. He was head Islamic Banking Risk and Compliance at Stanbic IBTC Bank and set up the non-interest banking window as well back in 2009. He has initiated products compliance with non-interest finance principles for Islamic IPTC Asset Management Limited. He's also worked as an investment analyst, business analyst in other capacities. Dr. Basheer completed a postgraduate diploma in global business at the Said Business School, University of Oxford. He's completed the executive program in international housing finance at Wharton, University of Pennsylvania, the USA. He holds a PhD in integral economic development and Islamic finance from the Da Vinci Institute for Technology Management in South Africa, in conjunction with the Transam Center for Integral Development in Geneva. He has not stopped there. He started a master's in philosophy and economics from the University of Buckingham, authored the book titled An Integral Approach to Development Economics, Islamic Finance in an African Context, and is co-author of Islamic to Integral Finance, a Semiotic Approach. He has published over 30 academic articles and chapters and over 50 non-academic articles. He is also a research associate at the University of Johannesburg. As I mentioned, a member of the International Atlantic Economic Society and the American Economic Association. So without further ado, could you join me in welcoming Dr. Basheer Oshodi to share his thoughts on the local and global opportunities that Shariah Compliant Investment offers us in Nigeria. Thank you very much.
Okay, thank you very much, Babamik. I really appreciate that. So what I'm going to do today is just to share the storyline of Shariah Compliant Equities, just the very basics, if you like. I'm going to allow my senior lecturer, if you like, Mr. Ahmad, to take the bulk of the practical element, right, relates to global equities. So allow me share my screen, and then I'll look at the storyline. Yeah, while I'm trying to share my screen, let's start to look at overall Islamic finance. So again, I'm going to start with the very basics of Islamic finance, and then I'll talk about the potential, if you like, contracts that we'll be able to use in this type of transaction before I then go into other, if you like, interesting rules. I'll talk about the prohibition, I'll talk about screen equities, the rules around it. When we're talking about equity, we're also talking about REITs. REIT is a form of equity. It's just backed by assets, by this time around, by real estate. I'll talk about investment contracts that is applicable. Yes, I mean, I'll show a slide on funding and risk, the kind of risk element that you have, in such transactions. And of course, I'll look at a bit of market performance and, if you like, the investment process. With this, to give us a very good feel of in the overall concept of, if you like, the topic. I'm not going to go into this slide too much. I'm only going to look at the dotted blue boxes, right? Talk about Islamic finance. We can't say so much about it without stressing so much on, the primary purpose of Islamic finance. On the one hand, yes, we need to make money. We need to make money from transactions. On the other hand, we need to ensure that risk, as much as possible, are well mitigated. Right? But more importantly, we also need to align with the maqasid. In fact, the foundation of Islamic finance is the maqasid. Even though we're not covering the entire aspect of Islamic finance today, it's nice and it's interesting for us to know that there's a guiding principle. It is that principle that gives you a soft heart when you're doing Islamic finance, most of the time, right? Without being taken advantage of, if you know what I mean. It gives you a soft heart to be able to, if you like, navigate, negotiate, reappraise, restructure, reprise, sometimes, transactions you know, and when there are shocks also, it then means that if you go back to the rules of the Makassid, it then also gives you a good feel, a guide towards how you should go around it, really. So let's look at the most important parts of Islamic finance, which is to prohibit interest. You know, interest can be defined in several forms, right? Interest can come in the form of, if you like, money earned or money received or money itself. When you earn money or receive money, you know, it's interest. When you give it or you take it. Now, that's about all a lot of people know about, you know, interest. You just feel, okay, money is not allowed. Money on money itself is not allowed, which is interest. Interest, again, we're not going to talk about the definition of interest as captured in the hadiths, because we don't need that for this short lecture. And we're not going to stress ourselves trying to over-define it, but we just keep it simple and basic, that money on money, money earned or money received on money, you know, is interest. You know, any form of reward as a result of parting away with cash, as a precondition to the fact to money you're giving out is also interest. So interest is not allowed. And so whatever we're talking about Islamic equities, share at the back of our mind that there will be no interest. Right? Number one. Number two, prohibition of uncertainty. You know, certainty can be defined. I mean, scholars have battled to define what uncertainty is. You know, call it garar. You know, how do you want to determine it again? You know, in the middle of overall risk that we have in today's time, you know, how can you eliminate extreme risk or extreme uncertainty? You know, so scholars will simply tell you that rather than prohibition, just call it avoidance or uncertainty. Just avoid it as much as you can. You know, because in every transaction, there's a large element of uncertainties in it. You know, even a simple mudaraba transaction, partnership, you know, it's uncertain. Will there be performance? Will there be no performance? If there's no performance, how do you navigate your way around? And even a wakala transaction, you know, will the agents run with the money? Will it deliver? Are you going to go back to the Sharia board and say, hey, I need a guarantee because the amount is huge? You know, how do you then protect yourself from even a simple agency transaction? You're asking somebody to present something for you or to buy something for you, you know, or to act as your agent in the market. How do you ensure that the person delivers? What if the person does not deliver? You know, who takes the risk? You know, so Sharia scholars, again, sometimes based on the circumstances, we look at it and say, hey, you know, there's a need for us to make certain adjustments or include new variables into this uncertain transaction, right? So when we then go strictly into stock markets, you know, we then need to look at examples of what has happened in the past. Again, I'm just going to spend the first few minutes trying to paint, if you like, the foundations of these rules or the guiding rules of Islamic finance as a whole. It's a lot more specifics on the equities markets. Now, prohibition of gambling, anything that has to do with gambling. You see, gambling for us or under Islamic finance will mean anytime you put down something with the hope that you can lose everything or gain everything. As a simple rule, again, for the purpose of this, I'm trying to see how we can avoid the use of too much Arabic terminologies, you know, just to keep it simple and to keep it very basic, right? The use of, one second. So just trying to make a bit of, okay, so we will, sorry, just a bit of minor distraction. I got a message. I'm trying to navigate around that. But I'll still continue. Now, how do you solve this problem around gambling? You know, what makes a transaction to be gambling? Can equities be gambling? You know, equities, can it be gambling? Some scholars have argued that because of the volatility, are you not sure there's no gambling in it? You know, you put in some money, you can lose everything. You know, so it's equities gambling. while scholars are trying to define gambling furthermore within the realm of today's reality, people are then concerned around at what point do you think or do you identify equities as a form of gambling? At what point? And would you say, hey, at this stage, equities has become gambling, and it's no longer just an investment. All right. Now, so we're going to talk about the financial screen and the sector screen, all of that. But even with all of those, if you like, prescriptive risk, can there be emergent risk that can then freeze you from taking certain decisions, right, in terms of equity investment and the likes? Then we talk about unethical concerns. The industry shouldn't even go to at all. They've been largely defined, but sometimes, there could still be room for further definition of industries. So even if you have identified a company to be Shariah compliant, it still means that there could be one or two things that you may need to change or to make it fully compliant, right? What are those things? Now, when Brother Ahmad goes into the topic fully or into the, if you like, deals on the table, he can give us a good feel, a good idea of those things that should be, that should pass the test of unethical concern, or that will fail the test of unethical concern within the realm of reality. I'll show you a bit of the Nigerian case as I go on, right? Now, again, I don't want to talk about the Makosid as such, but overall, just to paint a very light picture on the Makosid, is that anything that helps to achieve human well-being and good life, whether it's in business or it's not in business, it doesn't matter. As long as it seeks to achieve communal well-being and human good life, or if you like, human well-being and communal good life, where community is happy, basically, is what we want to promote. So how can equities then help achieve this? The five main things we must achieve through this: the human self itself, making human beings to be distinguished, enriching posterity, that is the future generation, enriching faith, which is very common, the intellect, and of course, protecting wealth. So let's concentrate on the protection of wealth. Within the realm of Sharia governance, how can equities within the realm of, again, of the Maqasid, then protect wealth? So in the middle of volatility, how do we secure protection of wealth? This is one of the Maqasid. So on the one hand, we're interested in equities, which is interesting, right? If you like, stock markets, locally, globally, right? On the other hand, we want to protect the wealth. We don't want to lose it. It is bad enough, to keep your money as cash and be staring at it and be happy that my money is there. Inflation is hitting it up, but there's no problem. As long as the money is there, I don't have a problem with that. But when the money then reduces as a result of business transaction, either in terms of non-performing assets or a company going down or stock declining or overall volatility in the local or global stock market, as a result of war, management decisions, and all of that, where does the Makosi then come in to solve this problem? Again, from a theoretical perspective, and from a risk perspective also, it becomes very important to say, must equities or should equities always meet these conditions of the protection of wealth? Or do you want to allow the wealth to evaporate slowly and gradually and go away, right? How do we address this situation? Now, I'm not going to take time to define money and all of that. I think I'll just move on quickly to say, even if you then say want to invest in local global stocks, right? In this case, what methods are we going to use for these investments? What basic simple method are we going to use? Are we going to use a Mudaraba or use a Wakala? Mudaraba is simply your investment partnership. You put in your money with a company, the company takes all of the risk. When there's profit, they share. When there's loss, you share. The amount of cash releases cash. and then the entrepreneur will have lost reputation, right? Now, would you want to use that for equities, or simply use that for sukuk? Or do you want to just consider that for a simple investment note or a commercial paper, right? Or do you want to apply it strictly into equities? So to make it simple, do I say Trust Arthur or ABC company, with a regular license, takes all of the funds, invests it in equities. Let's assume it's one of the oil and gas companies listed on the stock exchange, or if you like, within the bigger universe, which I'm going to cover briefly. Would I invest that money, give the fund to a stock, to an investment company that handles the management with the hope that there will be return? Then what if there's government change or policy change? Will it affect, or even board decision, will it affect the product or the instrument, and then makes it volatile, expose it to volatility, right? If that happens, the owner, the fund arranger, will lose money, right? Will get nothing, will not get any fee for doing that work. However, the investors will also lose money. That's what it simply means in the Mudaraba structure. In the equities market, will there be some kind of, how do you mitigate the shock or the risk of not losing funds, right? In the Mudaraba arrangement, alternatively, to keep it simple, how do you look at what professionalism or what skills do you need, or do you expect from your stockbroker to have a list of stock locally, globally, and pick the ones that won't expose you to volatility? Either you're using a Mudaraba or you're using a Wakala. And that is what we want to discuss today, right? So on the one hand, we've identified the fact that there's risk in every business. The equities market is particularly very risky too, right? However, with a potent manager, can you identify those good stocks that have performed well over the years and have been well mixed with other stocks in a manner that will allow you to always show profitability all the time? In 2010, I was working with a company, one of the banks, and then we did a Shariah Compliant mutual fund at that time. And where's the Wakala? We'll talk about Wakala. But just before that time, before 2010, the mutual fund that he had in the country, the fund arrangers or the stockbrokers had used Mudaraba. And because stock market was declining consistently at that time, the owners of the cash, of the money, lost their cash, and the fund arrangers couldn't get any fee for doing the transaction. Of course, don't forget that I had the global economic crunch in 2008, 2009, thereabout. Yes, maybe it's a spillover, and maybe it's not even a spillover. Maybe there was no spillover in Nigeria, because we're not particularly engaged in those subprime markets, that led to, the decline of global wealth, right? However, we then found that there are other circumstances that made the market in Nigeria, to move or to be volatile. And so the Mudaraba transactions pre-2010 were exposed to losses, right? How do we correct that? Well, before we go there, let's look at the major risks we're exposed to in the Mudaraba: displaced commercial risk and risk of rate of return on the one hand. On the other hand, assuming there's expected profits here, the investor getting so much in a typical Mudaraba transaction, don't forget there are some things you need to take out. You need to take out PR, profit collection reserve, of 1%. That's not applicable to Sukuk, it's not applicable to equities, it's not applicable to REITs. We're going to consider REITs as part of equities at this time, right? Withholding tax, 10%, also not applicable to Sukuk, of course, when you have tax exempt. So from certain periods, government gives tax exempt to bonds and Sukuk, right? So where you're in the middle of that regime in Nigeria, in the case of Nigeria, you don't have to pay tax. However, for regular investment deposits with banks and fund management companies, you'll be exposed to with 10% withholding tax, right? However, on equities and on REIT, that's not applicable. So there's an advantage in that space, right? And then your profit that is available for sharing is after all of these deductions, where applicable, has been taken out, right? So yes, the partnership model looks risky on the liability side or investment side, but there are concessions in an equities situation, right? And that then makes it fantastic and interesting, provided the fund manager is competent, is proficient. Okay, so now let's look at the Wakala option, agency, where the fund arranger or the stockbroker is just saying, hey, I'm an agent. And so post 2010 in Nigeria, a lot of the fund companies, a lot of the transactions that then happened was such that the fund manager took the position of an agent, right? So that at least you get your fee. But more importantly, is the fact that there's a need to ensure that these transactions are fine. They're in terms of governance, in terms of risk, all of the issues are covered. Again, very similar to the Mudaraba option. You put in an investment. Is that a PR? In the case of regular investment with banks and asset management companies, yes, you can make provision for, PR, profit correction reserve, which looks like your loan loss provision in the conventional banking system. And you can also then make provision for, additional loan loss provision. So on the one hand, there's loan loss provision. On the other hand, there's PR. These are the provisions that banks put in place to cushion the effect of losses when losses come. Withholding tax, like the first one, exempt in the case of equities and of course sukuk or bonds in Nigeria. IRR, not very common in Nigeria at this time. Investment risk reserve, that's the reserve you set aside, from your total profit of the profits for the client. So if this gentleman puts in 2 billion naira, part of his profits, we set aside part of it, but we don't give it to him. We just keep it in the cooler. So when there are shocks, we take that profit out, right? Unlike PR, which is from gross income, right? So all of these things are being considered. Again, for this proposition on the table, do we then consider a Wakala structure? The Wakala structure allows the owner of the cash, to, if you like, take a bit of cool-off period, allow somebody to manage, but the arranger then takes his own fee on the back of a very strong management team to ensure everything works perfectly well. Now, by the time Brother Ahmad talks, we'll start to see the role investors themselves will play. By investors, I mean the fund, the owner of the fund, the Robomar, the owner of the fund, the role they're going to play in ensuring that they monitor the stock. And then, of course, our stock can also play a major role here to ensure that the best stocks are the ones that are being bought in the markets, and also ensure that everything goes perfectly well. Now, in every transaction, there will be risk. In fact, some Sharia scholars have argued that where there's no risk, then there's no Islamic finance. Practically, when the risk gets too much, investors pull away, right? When they see that the risk is high, or when they see that, the uncertainty, in that transaction, even if it's Shariah compliant, the contracts are fine, everything looks good. If they see that the expected risk is very high, they move away. So have a look at this curve. This is my amazing yield curve, right? If you like. I can see private equity having the highest returns, right? You can see real estate notes, higher risk, but higher return, right? You can see CPs and Sukuk, somewhere close to the top at the center. Investment instrument, lower returns, if you like, the investment you have with banks, the return may not be high, but you are covered risk-wise. However, I can see listed risks or equities, a little bit towards cash, and that's because of volatility. Now, this can actually jump up amazingly. You can actually get to this top. You can double your investment or triple it or put it in several folds where, where you have competent managers in this area. Right? And so that's one thing that we're going to have to explore at this time, to say, in a REIT or listed equity situation, how can I enjoy the return of private equity or real estate notes? How can I be on top, even though it's equities, right? And so there has to be a unique balance, between all of these factors. Now, let me run through the screening methods, which is quite global, right? It's like a template, right? Again, I always like to mention that Sharia scholars have the powers to adjust these templates anytime they feel they should adjust it. So let's pick the first one, which is easy and basic: sector screening, or if you like, qualitative screening. You pick out the tobaccos and the alcohols and the ammunitions and the banks and the insurance companies and the gambling outfit. Just take them out. Number one, you're left with a few companies called the universe, right? Now, from these few companies you're left with, you then say, okay, this company, is a shopping mall or a shopping franchise. However, they still make some money from selling, alcohol and tobacco and all of that. All of the monies they make from this, if it's not more than 5%, Sharia scholars have accepted it, even though, again, Brother Man is going to explain the practicability, how you select a certain portion of your income, that is from non-permissible income, how you pull it out from your total profit and give it to charity, right? On the one hand. On the other hand, you want to look at the market capitalization of the company, total asset, and say, how much debt does this company owe? So this company makes, glass, bottles, whatever. They make glass, the glass making company. Because the glass making company, it doesn't then mean that, they are fully Shariah compliant. They make glass. You can use glass for anything. You can make tumblers out of it or make bottles out of it or whatever. But they're taking money from a conventional bank and they're paying interest of so much, right? Now, if the interest-bearing debts they've taken from the conventional banks, if it's more than 33% of their total asset or market cap, then they're not compliant anymore, even though they are simply making glass, just glass, from sand. That's what they produce. But because they have a lot of debts, conventional debts from conventional banks, sitting here and there, because of that debt is more than 32% of the market cap or total asset, they become non-compliant. Number one. Number two, well, that's the second one now. Number three, cash plus interest-bearing securities is divided by the market capitalization. Again, must not exceed 3%. Receivables divided by total assets must not exceed 3%. Let's start with income from bonds, from T-bills, from conventional banks. So they've invested money in other banks, right? They make glass. That's what they make, glass. But because they've invested money in federal government bonds, it doesn't matter. Treasury bill, which is interest bearing, into other commercial banks, they are earning income from that investment, right? The money that their cash and their interest bearing securities, if you divide it by the market cap, it should not exceed 3%. If it exceeds 3%, they are not compliant, regardless of the fact that it's glass they're making, or they're into oil and gas, or they're into cement, or whatever. It doesn't matter what they're into, right? Now, again, scholars, analysts have tried to come up with other methods to balance, the financial element, to say, we can include a few more. But let me not bore you too much with all of these things. Let's quickly go to an unusual level, which is the third level of screening. Unusual because it's hardly talked about, right? And that's because, it's a function of management issues. Where there's a management shock or there's a potential, industry shock even though these guys make glass, even though their managements have gone to the best schools, right? Even though they do everything right, but there's an impending shock that may affect that industry, that market, or that company. Analysts can as well say, hey, we're going to put in a third level appraisal, even though they've passed through the sector screening and the quantitative screening. Analysts can say, no, notwithstanding, we don't want to do this business. Or even the Shariah scholars can come up with it and say, no, because of one or two reasons, we want to back out from this deal. It is not Shariah compliant. So you can see how complex equity transaction can be. On the one hand, they're only making glass. On the other hand, they've missed a lot of steps, which makes it non-compliant. In Nigeria, the universe is very small. I'm going to round up shortly. The universe is small. It's so small that you're left to just a handful. You can see, I don't want to mention the names, but you can see it on the screen. They name the few companies, the few listed companies that are Shariah compliant. They're just so few. There are so few that the universe in Nigeria then becomes too tiny. Even though Nigeria is seen as a big market, at every point in time, there's always been less than 20, right? But the ones that are most active, or the ones that I can then trade in, they then be barely a handful most of the time. Rather small universe. If we're going to allow Brother Ahmed talk about the global market and see whether we can have an expanded universe, right? Now, REITs are also equities. Again, I'm not going to waste a lot of time talking too much about REITs. Because they're equities, the first question I'm going to ask, if you look at this graph, the performance of REITs in relation to the stock market in Nigeria, has it been anything fantastic? Over the years, we have not seen that. Some more recently, a company came up with its own REITs, made it Shariah compliant, and which is of course, which has a little more stand than the first three REITs you have seen here. Again, I'm just trying to avoid mentioning the names, even though they are right there on the screen. Now, the more recent REITs came up with unique characteristics, right? Again, can you do non-listed REITs? No, certainly not in Nigeria. SEC will not allow that. The REITs must be listed, right? It must be listed. While it's being listed, it's going to be equity or mortgage REITs. Equity risk, of course, you own and operate your own properties, basically, as equity. Properties are yours. They're within your own portfolio. You're putting in the stock market. You're running your show, right? While the mortgage REITs, invest in mortgages, or if you like, home finance facilities or home finance structures and other related assets, right? Now, so REITs are part of equities. Again, there's a big question here. Can banks invest in REITs? The reason why I'm asking this question is because, at some point we experienced it when there was a lovely REIT in the market and while I was in the bank, and we struggled to invest in it because it's equities. It fell into the equities market, even though it's backed by real estate. And so, we realized that, hey, there may be a challenge. And don't forget that institutional investors are big investors. So when the banks cannot invest in REIT because it falls under the equities markets, it then reduces the potential cash flow into the REIT space in Nigeria. Now, again, talking about the more recent REITs and the uniqueness, strong governance and compliance rules, best-in-class funding strategy. They concentrated on office space, industrial space, unique residential space and healthcare. At the time when COVID emerged, which then created a bit of shock, within that space, even though that would have been the best, but again, what happened? People just stopped going to work. And that then affected the commercial space for REITs. And if you're then doing residential, where in Lagos, where in Nigeria, where in the world do you have these residences? Is it in central London or is it in New York? Or is it just somewhere in the states that is not commercially viable? Is it an industrial estate? Is it an industrial estate? What are they producing? So again, these REITs address a lot of these concerns, right? And of course, the yields became good, fair enough. I was an investor a few days ago, and it says, hey, Basheer, my income must be higher than the rate of inflation. If you want income higher than the rate of inflation, it means you then have to take a little more risk than the other guys, because it means you have to create the assets. And when you create asset, it comes with its own unique risk, right? And so the next question is, hey, client, do you want to do a Mudaraba or do you want to do a Wakala, right? Do I just introduce you to the owner of the deal? You take the risk, I take my fee, and I take a walk, right? And the same thing applies here. If the investor says, hey, we want to do a lot more, then you have to then be exposed to a lot more risk. The alternative is then to adjust where there are shocks, where there's a room for, if you like, some sort of a structure. Now, process is clear. Identify the best brokerage company, and that's why we have Brother Ahmad that was going to be talking to us now. Decide how much you want to invest. You must have a new trading account. You carry out sufficient research on your own, and then of course you can conveniently buy the stock, right? But again, number two, there's an account that you must have. You must have immediately decide how much you want to invest. You must have a central security clearance system account. They call it CSCS. Individuals can have it, companies can have it. But you must have this so that if you want to use that instrument, for trading, it becomes easier. You want to sell or something, as the case may be, it then becomes a lot more interesting. So I'm rounding up. So if you look at, of course, you have the NSE Lotus Islamic Index. If you compare it to what you have in the market, to the conventional market, you see that the Islamic Index is performing better. And this from 2017 to 2023. You can see the performance is ahead of the conventional space. So it means that the effect of the stressful screening of Islamic stock is to the advantage of investors. Even though it looks tedious, why are you having to screen so much? Take this out, take that out, take this out. By the end of the day, you see the performance is better, right? Which makes it a better stock to invest in, locally, globally, I must confess. Now let's look at the global one. Look at the global one. The same thing is happening here. You can see that the Islamic one over a 10-year period, performs better than the Dow Jones Global Index, for example. That shows clearly that the risk factors you have injected into the Shariah compliant equities makes it more viable than the conventional one. At this point, I'll just stop. I'll pull down my slide and I'll allow Brother Vladimir Ekon to continue. So that'll be all for me at this time. I'll wait for question time at the end. Thank you very much.
I hope everyone was able to enjoy and benefit from that very enlightening presentation by Dr. Basheer. I'll just mention that we'll keep the structure simple. We'll allow Brother Rehan to do his presentation, and then we'll have a question and answer session. I'm already seeing participants asking some questions, so if you can just please bear with us till we reach the question and answer session at the end of Brother Rehan's presentation. We can now address those questions. If one was to quickly summarize, Dr. Basheer has explained that there's a divine requirement that supports our need to create and distribute wealth according to the moral principles of Islam or way of life known as the Sharia. Islamic finance, in accordance with the Sharia, does not permit the receipt and payment of riba, interest. He mentioned gharar, excessive uncertainty, gambling, short sales, or activities that can be considered harmful to society. Apart from these prohibitions, Dr. Basheer also touched on The fact that investment according to the principles of Sharia also caters several key factors, such as enriching the intellect, enriching your faith, enriching posterity at large, and also the protection of the individual or the corporation's wealth. He touched very briefly on investment options, including mudaraba. For those who are not aware, mudaraba is basically a partnership when one party provides the capital while the other party provides the labor, and both share in the profits. The provider of the capital is known as the Rabb al-Mal, or silent partner or financier, and the party providing the labor is known as the Mudarrib. He touched on the wakala structure as well, when investment agency, for example, takes ownership of the funds on behalf of the subscribers and manages those funds in a professional manner. So I think that's a very natural segue for us to now invite our second speaker, Mr. Rayhan Ahmed, the co-founder and CEO of halalstocks.co, to give us a practical example of how Sharia compliant investment in the equities market can be done. Very quickly, by way of background, Brother Rayhan graduated with a computer science major at the University of New South Wales in Sydney, Australia. He brings a diversity of experience from his 15-year high-tech career, holding roles in engineering, technical sales, business development, and marketing. He's one would consider a very committed Muslim, mashallah. He served as the Chief Information Officer for Muslim Aid Australia, one of the largest Muslim charities, not just in Australia, but globally, as part of his passion to give back to the global Muslim community. It was during this time at Muslim Aid that he saw a gap in the market for high-yielding Sharia-compliant investment systems that could be used to help the non-for-profit sector become more self-sustaining. That led to the founding of halalstocks.co. One would consider it the world's first Sharia-compliant algorithmic investing service. So without much further ado, Brother Rayhan, please feel free to share the slides, and look forward to hearing.
Jazakallah khair, Dr. Abdul Hamid, for that flattering intro. Alhamdulillah. You can also refer to me as Rayhan. That's my first name. Alhamdulillah. It's a pleasure to be coming to you from Sydney, Australia, which is where I reside. Alhamdulillah. It's where Halal Stocks was also born. And I really wanted to thank Dr. Basheer for his very enlightening presentation. I personally was learned a few things from there, and looking forward to the Q&A session with Dr. Basheer as well. So Jazakallah khair for that. I'll share my screen just so we can kick things off without further ado. Bismillah, salatu wassalam ala Rasul sallallahu alayhi wa sallam. So this opportunity that we have today, alhamdulillah, to share with you something very exciting. I've been working on it for almost 6 years, and so there's been a lot of work behind the scenes in bringing this together. I myself, coming from a computer science background, using my expertise in data analytics and applying that to Sharia compliant investing has been a really fantastic, wonderful journey, and found some wonderful breakthroughs along the way that we've had over the last 4 years, under which this product has been under development. Alhamdulillah, we're partnering with Green Circle Energy in bringing this solution to Nigeria. Alhamdulillah. So I wanted to get back to, I guess, why equities and why we chose to focus on equities. The first thing is there's three aspects to this that I look at, right? So we're looking at, obviously as Muslims, we want Sharia compliant investment solutions. We want asset classes that are halal to invest in. And mashallah, Dr. Basheer covered those criteria really, really well. So, there's certain asset classes that fall within Sharia compliant. Obviously, there's real estate, there's private equity, there's venture capital, there's robo-advisors, you can buy precious metals, you can buy sukuk, and the list goes on. And of course, you can buy stocks and, under some strict Sharia guidelines, certain crypto assets as well. So that's the Sharia compliant universe that we all have. Alhamdulillah, it's a very vast universe that we have choices to invest in as Muslims. If we look at liquidity, then if we want liquidity in the sense that if I want my money within a week, especially when I was looking and working at the aid sector and the humanitarian aid sector, we would respond to disasters, humanitarian disasters, and so on, and we would need to redirect funds very, very quickly to those regions. And so liquidity was always a key requirement for me to explore, because it serves many, many purposes. If nothing else, those funds can be used and deployed very, very quickly and can be extracted from the investments very quickly. So those in the liquidity world, you've got robo-advisors, which are manage certain types of managed funds. We've got obviously commodities. We've got sukuk can be liquid as well. And then there's the non-Sharia compliant assets as well. There's derivatives, there's forex, there's CFDs, futures, and so on. So there is a large swathe of asset classes that we can invest in, or we can't invest in, that are highly liquid, right? But stocks, again, tick that box, and you can exit a stock position and have cash in your bank in a matter of days. So it certainly fits that requirement. And of course, the third requirement was performance. So we needed to focus on asset classes that have the potential for greater than 15% compound annual growth rate, so that you can obviously get ahead of the effects of inflation as well in most circumstances, but also grow wealth fast, right? So that's really obviously every investor's dream is that. And so if you crack the nut on the stock market, then you can absolutely gain 20, 30, sometimes 40% returns in a year, right? So and it can go up from there as well. So the stock market has that potential in it, but how do we unlock that potential that the stock market has? So I'll go straight into some of our the recent performance of our algorithms, right? So these are algorithms being compared to two other let's say benchmarks or yardsticks. So the example Islamic Fund is there, which has typical equity-based performance. It's diversified. It would invest in sukuk. It would invest in potentially gold, and very broad indexes of Sharia compliant equities as a set and forget, or you would say mostly passive instruments. That's the performance of it's a real fund in Australia that exists, and I just put it there as a contrast to what else is available. Now, the orange line on this on this graph, as well as on the left here, is the S&P 500 Sharia Exclusions Index, right? And SPUS is an ETF, an exchange traded fund that tracks that index, and we can see that significantly outperformed the example Islamic Fund, but it's typical of conventional robo-advisory type funds as well. So this fund isn't particularly disadvantaged by being like an Islamic fund or anything like that, but its performance is equivalent to what we would have expected from standard robo-advisory funds. SPUS is obviously an ETF tracking a Sharia compliant index. It performs much better. Actually, over this period, it performs at 24% per annum, which is extraordinary for an asset. And obviously, this is our algorithmic portfolio construction. We get, we break the 30% mark on this period here. It doesn't mean that you make money all the time. Like, we have to understand that equities are volatile. They do go up and down, and that's really where the opportunity is created with equities, right? So without volatility, there's no opportunity. So as the stock market moves around and creates opportunities for investors to identify mispricings, that's what our algorithms do. And then it allows us to get better entry prices and obviously exit when the volatility is in our favor. So the other thing that I wanted to just quickly touch on was, and Dr. Basheer already covered this, but the alpha that's already associated with Sharia compliant equities themselves, just the fact that we as Muslims are required to use the screening criteria that results in us giving a Sharia compliant tick or a pass to a stock, and it is quite rigid criteria, actually results in better investment performance. So Sharia is on our side when it comes to equities, right? As long as you have access to a universe that is large enough. So here we can see on an annualized basis, this is the S&P global index here. Sorry, you can't see it, the name, but it is the S&P 1200 global index. So it's the 1200 biggest companies in the world on any stock market, and it's got a Sharia screen put across it, and we can see that on an annualized basis for 10 years, that would have returned 12% annualized, and if the non-Sharia compliant version of this index would have returned 10.44. So on an annualized basis, it's over 1.5% better performance that you get just because we're Muslim, alhamdulillah rabbil alameen, or just because we care to screen for Sharia compliance. So Sharia compliance is definitely something that is helping us in our investment journey as Muslim investors. So at this point, I'll give you a quick tour of the service that we provide at Halal Stocks. So we allow our clients to benefit from the algorithmic investment signals that our own model portfolio generates. And what it does is it ends up generating buy and sell signals on a monthly basis. And so clients can set their monthly budget. And the idea is that we don't go lump sum into the market because then you have market timing risk. But the idea is to have a monthly budget that you deploy over the first year of your investing. And then after that, we compound and roll it forward. So it's just the way the algorithms work. They're trying to protect you from going all in into the market, which is usually not a great idea. So our clients will set their budget, their monthly budget, the first 13 months of investing, and then they'll split that up and deploy it into the market over the first year. And so our algorithms will pick the stocks. Literally, that's what they do to build our model portfolio. So you can see these are the 7 stocks that are on the various. These are U.S. exchanges. So we, because the U.S. market has the biggest choice when it comes to companies. One, there's over 6,000 stocks. Sharia compliant companies, which there's well over 1,000 stocks, close to 2,000 stocks that pass Sharia screens. So you have an incredible choice of investment assets that you can pursue in the US market, and that's what we focus on. It's also the world's most accessible stock market. So it helps global investors wherever you are. One of the most readily available markets to invest in is the US, the NASDAQ and the New York Stock Exchange. So we generate, our algorithms generate these signals. Obviously, you can go in, and the app that we have allows you to say, look, I would like to buy this company. So then you would add it to your portfolio, enter the amount invested. That's based on the budget. It would be, this number here, 171 on the budget that's here in this demo account. And then I would enter what the actual price that the trade cleared at, and I would hit submit. So it helps you track your portfolio because the algorithm is very specific about what it sells and when. So again, these are the stocks that the algorithm is selling on this date. So again, we can trim our positions based on the buy and sell signals. The other thing that we need to note as a Muslim investor, it is a requirement to purify dividends. So that some part of a company, income statement will have interest, for example, if nothing else. And that's because they have cash in a bank account. Bank accounts pay interest. And we as Muslims, just like we would purify our own bank accounts that earned interest, it's the same thing as a shareholder. When that company pays dividends, we calculate based on the stocks that you have entered into your portfolio through the app. We will calculate how much dividend income that needs to be purified, so that we can make it easy for you as an investor to purify what's required of you, instead of having to calculate this yourself, because that income, it is incumbent on us to purify. So we make it easy for our clients to know how much they need to purify every month, and know how to calculate zakat for their portfolio. So because if you have a buy and hold portfolio, zakat would be calculated on the zakatable assets on the balance sheet of the company that you own shares in. And so we help our Muslim clients to make it easy for them to pay the zakat. So on their zakat anniversary, they would simply look at this figure here and know, okay, this is how much zakat I need to pay on my long-term stock portfolio. The other, I would say, advantage of zakat in this scenario for long-term portfolios, which is what we manage, is that the zakat rate is less than 2.5%. So depending on the zakatable assets of the company, that's the zakat rate that you would pay. On some companies, it's very small. The zakat rate is very, very small. So I can show you here, for example. So on this ticker here, KL, for example, the zakatable assets would translate to 0.37% multiplier instead of a 2.5% multiplier. So we calculate the zakatable rate for every single company that our algorithms generate signals for. And so that makes it easy for us to then the individual portfolio, how much what the zakatable value of that portfolio is, which works out to be, so this is a $100,000 portfolio. So for a $100,000 portfolio, the zakat is $1,500 basically here. So you can see it's averaging at about 1.5% zakat rate across all the companies that are invested in this portfolio. So it's less than 2.5%. So if you're keeping cash, for example, then obviously, alhamdulillah, you pay more zakat, you get more reward. We should not try to minimize zakat, but the reality of investing in the stock market is the impact of it is that your zakatable rate goes down if you're a buy and hold investor. So you're someone who buys a stock without the intent, without knowing when they're going to sell or if they're going to sell, right? Maybe your children will inherit these stocks. Who knows, right? So because our algorithms don't have a definitive sell period, right? So typically they'll hold for 13 months, but there are times when we'll sell after that or before that, right? So it all depends on where the algorithm thinks the holding period should be, but the typical holding period is just over 1 year for the stocks that the algorithm buys. We can also look at like the diversification here. So this is a full portfolio, after a full year of investing. So we can see how it's diversified. There's a fair amount of, there's a bit of gold in this portfolio. And then the rest is, spread out across various industries, depending on which stocks are undervalued at that time. So this is just a quick tour I just wanted to give you of this service. Yeah. All right. Let me just see if you can everyone see my screen properly? I just want to double check that things are working the way they should.
Yeah, I can see yours.
That's clear.
Perfect. All right. It's also good to hear someone else's voice. All right. So the other thing that we do is we provide short-term market signals. So here you can see a whole bunch of asset classes. We can see copper, we can see gold, we can see real estate, we can see timber, steel, iron ore, and so on, semiconductors, and see which sectors and specifically which Sharia compliant stocks within those sectors are currently, from a technicals basis, looking bullish or bearish. And that just allows our investors or traders really who want to make swing trades or shorter term trades and follow the trend, basically, which is a methodology of investing. We also allow them to do that. So you can see certain assets that turn bullish and bearish, and this changes on a weekly basis, so that if people want to make some shorter swing trades, we facilitate that for them. So that's a quick tour of the app itself, and I just wanted to cover off just the process. So you saw what the app is, but the full cycle of investing basically is that the client sets a monthly budget. Very important that they have a monthly budget for the first year of investing. After that, they don't have to deploy any more capital into the market. For the first year, they should have a monthly budget. The buy signals are generated by the algorithms. They're published in the app. Then the user and the client. So this is a self-managed, it's like be your own fund manager, kind of do-it-yourself solution, where the client can, whichever broker that they wish to choose that's available to them in their country of residence, they choose their broker that gives them access to the US stock market, and then they can replicate the algorithmic portfolio. So they buy what it's buying, and then they update the buy price based on what actually closed in their trading, in their brokerage account. And then they receive the sell signals, the same thing. And then they execute those sell signals and they input the sell price. And that's it. So it takes about 5 minutes to actually implement this portfolio for an individual investor who wants to replicate our strategy and the power of our algorithms. So even though the algorithms are sifting through thousands, hundreds of thousands of data points to produce the best trades of the month, the implementation of that we've made as easy as possible for our clients. So there's a lot of considerations that a person needs to have before they enter the equity market. One is obviously knowing how to calculate Sharia screening. The other is knowing how to calculate their zakat. The other is knowing how to calculate the purification that they need to do on the dividend income. And those are like the prerequisites or the ticket to the dance, so to speak, your entry criteria for you to be able to invest in the stock market. So we make that easy for our clients and empower them with this really groundbreaking algorithmic strategy, right? It's not available anywhere else in the world. It's our proprietary investment methodology. And we've obviously tested that over over 15-year backtest period. So it has been rigorously tested over multiple business cycles. So I'll leave it there for now. That's the first part of my presentation, and I'll hand it back to the moderator, and we can have this be a bit more interactive and perhaps answer some of the questions that have come through.
Jazakallah khair, Brother Rehan, for that enlightening again presentation on how basically halal stocks.co unlocks the potential of the stock market using Sharia compliant principles that allows for greater performance as well as liquidity. Again, the use of algorithms to pick the stock or your seal of stocks, I felt is one of those things that enables the investor again to have that opportunity to get involved in the market, for example, such as the US equities market. Again, to summarize, after he'd again gone through, similarly to Dr. Basheer, the principles of why, the reasons for why we are, required as Muslims to invest, Sharia compliant, or using Sharia compliant principles. What I found interesting as well was, their motto of, helping the ummah beat the market. From halal stocks, I think, especially where Muslims are concerned, there's a need to always have opportunities, and particularly where the ecosystem might not be very Sharia friendly. So to be able to extract or create those opportunities within an existing system, I think is very, 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 very important. In addition to that, I found a statement also very impressive that where an investor invests using Sharia compliant principles, the return, average annual return, actually beats the market, in comparatively. So that if you do what Allah wills or Allah is required, eventually, the long run, it is for your own benefits and financially and otherwise. So that was very, very telling and interesting. Thank you also for sharing on going through the process of using your tool to carry out those investments. I think after this, what I would like to encourage everybody to do, I can see there's some questions, so I think we'll proceed to Q&A, and it is going to be very casual. It's going to be very open. I'll take some of those questions, and feel free to add more to those questions as we go along. The first one is from Brother Umair, who's asking, how does inflation, and I guess this one is directed to you, Brother Rehan. He's asking, how does inflation impact equity prices? I guess one was to add to that, how does Islamic investment mitigate against inflation that we are increasingly seeing across globally today? Particularly back home at home in Nigeria. So I think, Brother Rehan, you can go ahead and try and answer that question for us.
Sure, it's a fantastic question, actually. Very pertinent today as well. I mean, all over the world, we're facing inflation. No one is really safe from it at this point in time. But one of the effects of inflation, we have to understand what inflation is, right? So inflation is the general price level rising, right? So the price of goods and services going up. And so that's what's the observed phenomena of inflation. Now, when prices go up, company revenues go up. That's what happens to companies. So from a fundamentals perspective, who's making the money? It's the companies. Their revenue is rising because the price of their goods is going up. All else being equal. So inflation has an upward push on the trading price of companies that are trading, right? So especially ones that are subject to the inflation. So if you're experiencing food inflation, then the revenues of the groceries or the food sector will go up because of the effect of inflation. And what ends up happening is obviously stock prices ultimately follow earnings and also revenues. So the stock prices have to correct upwards when inflation hits for those sectors which are experiencing inflation. So it has an upward push on stock prices merely because the dollar value of revenue is going up. The dollar value, as in the nominal value of earnings, may also be rising, which means the stock prices generally rise in an inflationary environment. So typically you'll see the stock market follow inflation because of that phenomena. There is an aspect that works against the stock price rise, which is what do governments or what do central banks do in response to inflation? So if central banks in response to inflation raise interest rates, then that has, I would say, a downward pressure on equity prices, right? And so there's a kind of a balancing act that occurs, but typically they don't raise interest rates higher than the rate of inflation. It's very hard to do. It can be very devastating to economies if they do that. So even though they raise interest rates, they don't raise them to the rate of the inflation rates, especially not straight away. And so typically the net effect of that is that equity prices still rise. So as just as a symptom of inflation, the stock market typically goes up. In nominal terms, yeah.
Okay. Dr. Basheer, would you like to add anything to that statement at all? Or?
No, thanks. I'm fine. I'm good with the response.
Okay. All right. There is another question from Brother Idris here. He asked, and I guess this could be addressed or directed to the both of you. He asked, is there a global benchmark for assessing Sharia compliant equities? Is there I'm guessing here he's asking whether there's a probably universal benchmark. I'd like either of you to take that if you're, Basheer, would you like to say something?
Yeah, please, Brother Ryan can take it, please.
Okay, no problems, inshallah. So this question can mean two things, so I'll answer both. The first is there a benchmark for assessing Sharia compliant equities, meaning from a screening process? There are many criteria. S&P Dow Jones have their criteria. Morgan Stanley have their criteria. There are many criteria that are diverse with regards to Sharia compliant assessment. I'm talking about legitimate ones that have been approved by scholars. The closest thing that we have to consensus, it's not consensus, but the closest thing we have to consensus on assessment criteria for equities is the AAO-IFI guidelines. Right? There's hundreds of scholars that are part of this board and this organization. So the IOFI, that we call it for short, the Accounting and Audit Standard Setting Organization for Islamic Financial Institutions, IOFI. That would be probably the most widely used standard for screening Sharia compliance for equities. So that's one aspect of the question, perhaps. The other aspect is there a benchmark, meaning a performance benchmark? On the S&P Dow Jones website, so if you go to the S&P Global website and you look up their Sharia indexes, so those indices, and therefore, it doesn't matter whether it's for Japan, for Europe, for Australia, country level specific indices, they have Sharia benchmarks or indices for a broad range of markets. And so those are very good or standard benchmarks that you can use to assess performance against. Like the one that I showed you, that is the S&P Global 1200 Shariah Index. You would use that to benchmark against. If you had a fund that invested in global Shariah compliant equities, it would be quite possibly an appropriate benchmark. Another one is the S&P 500. So the S&P 500 is used as a very common benchmark for large cap companies and funds that manage large cap style of investing. And so there's an S&P 500 Shariah Index, which can also be used as a pretty reasonable benchmark for at least for US equities anyway. So hopefully that answered that question.
Okay, thank you very much, Brother Han. I can see Dr. Adams' hand is up. But before I give the floor to him to ask a question, and there's a question from Brother Taib Yusuf. He says, Assalamu alaikum. This question is for Dr. Basheer. Given the way PER works, it is generally held that this puts short-term investors at a disadvantage who may have had PER apportioned out of the original profits, or do not wait to receive it later in the future. This could be seen as a lack of fairness to those short-term investors. He's asking whether you can give us any practical insights into how Islamic banks manage this bit or risk of stakeholder expectations. I hope you got the question, Dr. Basheer.
Very clear. Thanks, very clear. Yeah. So we'll call it that's profit equalization reserve. If you go to CBN guidelines, they put it there that the purpose of PER is to smoothen repayments, for investors. So to make it more practical, if you invest say 1 million naira in a Mudaraba investment with say a bank or a fund management company, and the bank says we're going to give you your profit share, let's assume it's 50-50, right? Let's assume that you're going to get by the time you convert that 50-50 to percentage, it becomes 10%, right? So the bank takes 10%, you take 10%. Now, in reality, the bank has probably made a little more than that. In reality, the bank has made more than that. But don't forget that while the bank is making more than that for, say, some oil and gas transaction, on commodity trading, the bank has probably lost some money, right? On real estate, there's probably delayed payment, right? So the profit has not come in, on maybe, asset finance, vehicle finance. They bought a certain number of cars for certain companies, right? And they'll have probably made some spread, or there's a moratorium. Now, by the time you then find the average of all of these transactions, right, they'll give you 10%, but maybe they've made a little more, a little bit less. But the purpose of PER is just to keep the money there. So in reality, it's from gross profits. It's not meant to be shared as such. When you had the global economic crisis, 2009, 2010, well, 2008, 2000, between that time, a lot of the Islamic banks were hardly affected. The reason was because they had been piling up PER for over 20 years, sometimes more. So can you imagine a bank having PER, just keeping the money for a very long period of time without sharing it? So when there was shock in the system, it was very easy to take out of that money. Amazingly, Malaysia, they've kind of scrapped it. Not scrapped it, but the banks that don't even bother to use PER because there's stability in the economy. You can predict the result of transactions. And as a result of that, Malaysia feels, hey, we don't need PER anymore. Now, IRR is what I think you're referring to, investment risk return, which is the profits. The profits after taking out the gross profit, after setting out PER from the gross profit, there's then IRR, investment return, that will take out from the investor's return. Now, assuming you have to get 10%, the bank will then say, hey, let's give you 9%. Let's keep 1% into a pool for you. So by the time we are exiting from your transaction, we then give you that 1% back. Now, practically in Nigeria, banks are yet to jump into IRR, as much as I understand. And that's because They just thought, hey, let's even try and do PR. Even the PR doesn't have a benchmark. It can be 0.1%, it can be 3%. In a place like Work Labs, we try to do 3%, which is high enough. It means you're setting aside a level of your profits into a pool. Now, for very big banks, which we don't have in Nigeria yet, they may as well say, hey, it's less than 1% or less than 5%, or sorry, 0.5%, as the case may be. So to answer your question, IRR is hardly used yet in our own environment, and some jurisdictions they practically don't use them because they feel the economies are fine, they are fair, they are stable enough. I don't know if I answered your question well enough, but in reality, the bank is not cheating. The bank is just setting aside money for future shocks that may arise. Of course, which was experienced during the economic meltdown. Thanks.
Thank you, Dr. Basheer. Let me quickly bring Dr. Adam, he's still there to ask his question.
Thank you very much, Mr. Moderator, for allowing me to speak. I also thank the two resource persons, Brother Rehan Ahmed and from Sydney, and my brother, Dr. Basheer Oshodi. Thank you very much. Mine is a rider to what was presented concerning the current situation of or status of equity market in general, non-interest or Shariah compliant equities. You may recall that probably last 2 years, precisely June 2021, PENCOM joined the terrain by approving the Fund 6, which is regarded as Shariah compliant fund. So one of the key challenges that we're having in this sector is the excess liquidity. We don't have much portfolio because of the nature of the instruments available in the Islamic space or in the non-interest space, as well as the nature of pension asset. They have some restrictions in the investment portfolios. So how do you think that what are the ways that the equity or the Sharia compliant equity market could be expanded to accommodate more funds from Fund 6 or the non-interest pension funds? Thank you very much.
Okay, I think that question will go to me. Sorry,
thank you, Dr. Adam, for your question. Dr. Basheer, you're jumping to answer that question. So I'll ask you to answer. We still have one more, and we're also cognizant of the time. So we have, I believe, maybe 10 to 15 minutes before the presentation concludes. So please go ahead and answer the question. Thank you.
Okay, thank you very much. Before I answer the question, let me quickly talk about the fact that Fund 6 is fantastic. It's a unique proposition. The implementation is something else. Practically, what has happened is a lot of Sharia compliant funds are yet to satisfy, the PFAs based on the PENCOM rules. Satisfy them in terms of having too good rating, the asset itself and all of that. And so we've not seen maybe a few banks. You only have 4 standalone banks, or 3. The 4th one is just coming up. I'm yet to see, maybe it decided to happen. I'm yet to see where the Fund 6 has gone into in a Sharia compliant bank. Now, for asset management companies, it's even more difficult. It's almost not happening at this time, where this fund goes into a fund. Even the fund is huge, over 14 trillion, right? That's a lot of money, right? But it's not going to asset management companies yet. Now, it then means that it will hardly go into equities at this time. I'm speaking from experience, what is happening in the markets, without any theories at all. So I don't see that happening in good time, where pensions or PFAs invest heavily in green equity. Again, I know there could be a certain percentage that can go into that sector, but don't forget the fund also allows you to put the money in conventional space where those funds are not available. So it then becomes a safe haven for the PFAs. You say, okay, we don't have adequate instruments to put these monies in. Let's live in the conventional space until such a time when there's a powerful market. Even if they have to put it in private sukuk, even private sukuk is difficult because it's as volatile as state sukuk, and in the same vein as even volatile as even the stock markets. Right? So we have not seen these monies go into that sector at this time, I must confess.
Thank you, Dr. Basheer. I hope Dr. Adam, I think he's got his hand up again, just to make sure that answered this question.
Okay. I must also mention that when we created and when we started to do proposition on sovereign sukuk, it came as a form of proposition in the beginning, and then gradually there was implementation. So I believe that even though Fund 6 came out about 2 years ago or so, we think that as we move on, shortly, PFAs will be more satisfied to put money into those Shariah compliant instruments over time. Thanks.
Okay, thank you very much. We have Brother Hussein Murtala who's asking, and I guess this is for you, Dr. Basheer, more of a regulatory question. What is the regulatory position of SEC in Nigeria regarding subscribing to foreign Sharia compliant stocks or equities? And what are the risk implications to Nigerian subscribers? Is his question. I'd like to hear your thoughts.
Yeah, thanks. So there must be approvals, basically, on the side of the fund arrangers. If a fund arranger is taking the funds, that means that when you're aligning with other, if you like, stock, you're acting as a stockbroker. I want to deal in foreign portfolios, it then means that there has to be certain kind of approvals, It's a different thing when an individual, just on his own, says, I want to buy stock in Nigeria. It's my money. I want to do whatever I think I like. Or I want to buy stock in the US. Shariah compliant, non-Shariah compliant, as the case may be. So an individual can take risk and just do what they feel is necessary. If they think they like that stock. If I feel I like Facebook stock, and I'm convinced that Facebook is Shariah compliant, for example, I can personally just say, okay, I want to invest only $100. I'll put the $100 there using the app. But as a corporate, it's a different ball game. That means that necessary approvals will have to be, taken. And that's why we cover the Mudaraba element and the Wakala element to say whichever way, as a corporate, certain approvals will be required. The risk implications to Nigerian subscribers. Just like we mentioned, risk is risk. Other foreign subscribers or Nigerian subscribers, whether you're investing the money in a non-interest bank in Nigeria, you're investing, in a private sukuk in Malaysia, it doesn't matter. Risk will be risk, right? So, and that's why I talked about when I was giving my lecture. I talked about the fact that the profile of the arranger then becomes very important. A few times in other jurisdictions, we do loads of DD, to ensure that the parties we're dealing with. And so amazingly, somebody can say, well, I have a bond in the UK, real estate bond. By the time you conduct the search, you now realize that, it's quite different from Nigeria. Nigeria must register with SEC and all of that. You rather in jurisdictions like even the UK, bond does not have to be registered. It can be private, So all of those decisions will have to be that of the investor to say, am I comfortable to invest in this private portfolio or to invest in this Sharia compliant stock? So if you do it as an individual, then of course you take that risk. If that's to go through the corporate, then the corporate will ensure that these are completed, they're well done, and certain all necessary approvals are gotten. Again, just like I said, the stock market is volatile. But what I've just shown here in this lecture is to show that as volatile as it is, it's still better than the regular markets, the conventional stocks. I hope I quite answered your question.
Thank you very much, Dr. Basheer. As much as I would like us to continue, I do understand that we've exceeded our time for this presentation, and I believe from the responses and the questions that have been asked, as well as even presentations. I hope everyone's benefited. I certainly have. The space is ripe for participation, particularly from those who ascribe to the faith of Islam. As Muslims, I think we're duty bound. In addition to that, I feel that because of the performance, if you're looking at it strictly from a performance basis, this is something that should be interesting, not just to Muslims, but anyone who is interested in equitable and investment opportunities. So I think there's a need for more, Dr. Basheer. We need to have more of these webinars to enlighten ourselves and to share more of these opportunities. I'm very grateful to everybody who's participated. I will hand over now to Dr. Basheer to give his closing remarks. There might be one. Let me see if there's time for one more question. Okay, someone's asking for us to share the slides. So inshallah, that will be done at the end of this. And also expressions of interest will be taken for those who are interested in the halal stocks, approach, which we'll be going through cross-Arthur. So Dr. Basheer, please, your closing remarks. Thank you.
Okay, thank you very much, Dr. Oyekon. I must mention that, in business, we start with what we call, propositional learning or knowing. We start with some kind of proposition, and then we see how we can then make it happen in reality, ensuring that all the T's are well crossed, right? I know there's a hand up. I don't know if we can take a question, but if we can't, what I'll say is that we'll send our emails out. You can actually send in your questions. So TrustArthur at this point can collate the questions, try to answer them, or escalate them to allow stock, and all of that. And we'll try and answer them within, if you like, let me just say 72 hours. I know allow stock is they're based in Australia, and all of that. So you can send us your questions. Let's try and so I can run out this program in the next few minutes. And what I'll just say again is that business generally is not the easiest thing. Business is tough generally. However, and that's why we learn strategy, and that's why we learn a lot of things to be able to ensure that business works well and effectively. One of the things that, again, to practicalize a transaction like this, I was just telling myself, that I should be the first to personally as a person, to say, hey, let me, of course, I've started trying the app, say, let me try this app and see. I remember there was a time in the UK, for example, there's a similar one, but for real estate, and of course, we visited that office just before COVID. And of course, at the end of the day, again, they started the business, they get small investors and all of that, and they share returns. It's, I think, licensed to a very large extent in the UK. And of course, in Canada, we've seen one or two of such also. So the best way is really to start personally, to say, hey, let me give this a shot myself. Again, from a regulatory standpoint, most of the foreign transactions we then have to, pass through the regulator to say, okay, we want to formally do this. Of course, that means also that the party doing it must have the requisite license or licenses, as the case may be, to jump into such. Alternatively, partner with those that have such, license or licenses, so that everything is going to be not only Shariah compliant but regulatory compliant also. So I think my appeal really is just like Brother Dr. Jibril mentioned, and we're going to try to be doing such, expose the market to transactions that we don't ordinarily do. To a very large extent, Islamic finance has grown gradually, slowly and gradually. Number of banks are increasing. Foreign management companies are increasing by the second. The portfolios available are increasing. The stock market also, to a very large extent, is picking up. It's picking up very, very quickly, even though the universe is still quite small. As we go on, we'll keep learning from experience, global, local experience. We think overall business environment and see how best we can achieve success in the industry. So on this note, I want to formally bring this session to a close. I want to thank everybody for attending, taking your time out on the Saturday morning, to be a part of this. Again, we're going to try and repeat this. It's going to be online. We're going to have it on our website and social media handles so people can listen to them. We'll also share with friends, family, clients, colleagues, in the industry, so they can get to know a little more about how this works. And on our own side, we'll start to practicalize it as individuals and see how best we can expand this space in good time. Again, I must say a very big thank you once again to everyone. I'm exceedingly grateful. The team is exceedingly grateful. Trust Author is exceedingly grateful. I must thank Brother Ryan Ahmad for his time. Of course, Dr. Jibril Ekon for the role he has played in all of this. I must say Jazakumullah Khairan. Thank you very much, everyone. And bye-bye.
Thank you so much. Thank you very much, everyone.
Jazakallah khair for the opportunity.
You're welcome.